Hello everyone, my name is Victor and in this video I'll be showing you how you can trade profitably with our signal service. Now you can use this with your own if you have a signal service, a signal provider, a Forex signal provider whom you are working with. You can also use these tips, but I created this video specially for our own signal service, which is Blue Pips Forex Signals. Now it's one thing to trade Forex and it's another thing to trade Forex profitably. Now you could be trading Forex and you could be stagnant, and you could be trading Forex and you could be profitable, and you can only be profitable if you apply proper risk management, which is what a lot of people don't know. A lot of people just know that they can buy when the price is going up or they can sell when the price is coming down. Now that is the basic principle of how the Forex market works, but it's not actually enough for you to be profitable. For you to be profitable, you have to take a set of rules seriously, and you have to play by the rules basically. Because if you cannot play by the rules, you could make so little and lose so much, and definitely you would be in loss. Generally, if you cumulatively, if you continue to run your business that way. Now, if you are working with a forex signal, because I know a lot of people are unable to generate profitable signals themselves because of all these things I've already talked about. But for we that provide forex signals, we have a lot of experience, and we know that this is what you need to do to be profitable. But if you don't know it, you can actually be taking our trades and still be in loss. So because of that reason, that is why I decided to record this video, which shows you how you can trade profitably using our signal service. Now you can see from my screen that I have 5 major points highlighted already, and I'll run through them now. The first one is set a special alert or tone for our signal group. Now most forex providers provide signals using a Telegram chat app or using a WhatsApp app. So whichever one you are using, WhatsApp is very similar to Telegram, no much difference except for the advanced features on Telegram. We definitely move on to over to Telegram as time goes on. But for now, we are working with WhatsApp, and what you want to do is, number one, you have to set a special alert or tone for our signal group. Now, when WhatsApp sends you a message, you get a tone, a beep, based on how your phone is configured. It may be a single beep, maybe a long beep. It depends on what it is. And normally, the same beep that goes for other groups also goes for your forest signal group. And this is not ideal because you wouldn't know when a signal drops, because you just think it's a normal message that comes from any group on your phone. And when we are talking about making money with the forex market, you need to be alert. So when these trade calls come up, you can quickly get on them and take the trades, and if once they come out profitable, you make your money. So if you're advanced, if you're a bit technical, you can go to your WhatsApp settings and adjust the tone for your own for this our own signal group. We are Blue Pips Forex Signal, so you already know our group, and you can set a different tone for our group, and while you set a different tone for every other group on your phone. So when you hear that tone that comes from our group, you know that a trade has been called, or an advice, or whatever it is coming from this group, because it's a very important. In fact, I think it should be the most important group on your WhatsApp chat platform. So you need to go to your WhatsApp settings and make this adjustment. Make sure the tone coming from this group is different, it's distinct. You can easily identify it and quickly run over to take the trade whenever it's called. And that's the first tip I have for you. Now the second one is take all our trades. Now this is very important because some people, they say they are busy, they are at work, so they can take some trades and not take the others. Now one thing with the forex market is that you don't know the trades that are going to be that are going to end up in a loss, because we try our best to offer you the best opportunities in the market, but there's what they call stop hunts. Now we cannot be 100% accurate. Now even no matter how accurate you are, it's possible that you call a trade and it hits your stop loss before going in your direction. This happens over and over again, and that's the reason why you have to take all trades, and that's the reason why you have to be in profit all the time, and most of the time, I mean, or cumulatively. So you have to take all our trades. Now in our Blue Pips forex signal group, I mean, we call an average of 10 trades a week. Yes, around 10 to 15 trades a week. Sometimes maybe less, depending on the opportunities available in the market. Now when we call 10 trades, we may not know if the whole 10 trades will go according to plan, but even if, since we are using a risk to reward of at least 1:2, which I will talk about very soon, if we call 10 trades and 5 go in the losing direction and the remaining 5 go in the profitable direction, you will still be in profit at the end of that week. Now, most of we achieve an accuracy of between 80 and 100% in our signal group. So definitely, we will definitely have more winning trades. So we can have like 6 winning trades in a week that probably hit full take profit. Now, if you are able to take all trades, you take the whole 10 trades, and when 7 goes as according to plan and 3 fails, you will still be in very good profit at the end of the week. But if you are selecting trades that you can take, and probably due to some constraint you are unable to take all trades, it's possible that the whole, let's say it's only 3 trades you can take in a week from our signal service, it's possible that the whole 3 trades you take ends up in a loss. Now, we don't want this to happen. In fact, it's a very, very terrible experience, because it now puts us in a bad light, as if we don't know what we are doing. Meanwhile, you are at fault, and that's the reason why I came up with this video to explain to you that you should always try to take all trades. Always try to, no matter what you are facing. And that's the reason for this number 1 point, which says that you should set a special alert tone for our signal group and take all trades. It's very, very important. Now we'll go on to the third tip. Now, in this third tip, you are supposed to use proper risk management. A lot of people, if you have been in the forex business for a while, definitely you will know what risk management is and how to use a proper risk management. Now, for those that are new, it's just simple. What it means is that you use the same risk for all trades. Now, when you have an account of $1,000, for instance, and you have a budget of probably $50, you want to take a risk of $50 on all trades, then you have to make sure your stop loss is configured in a way that you are destined to lose. In case it goes opposite in the wrong direction, it will take you out at maximum of $50. Now, if this is what we mean by using proper risk management and using the same risk for all trades. So if it takes you out at $50, for instance, and you have okay, let me switch to my let me illustrate this graphically. Now, let's assume that you have $1,000 in your account. $1,000 in your account, yes. And now you are wondering how you want to take this trade. Now we have now let's say you have $1,000 in your account, and you want to use proper risk management. Now we are advised to use a risk of 1 to 5% on all trades, not more than 1 to 5% on all trades. Now, what this means is that you have to share your account. If you are using 1%, you have to share your account into 100 places. And if you are using 5%, you have to share your account into 20 places. Now, if you are using 1%, let's assume you are using 1%. And for this $1,000 account now, for instance, let's assume you are using 1% for that. And okay, let's have another account right here. Let's have another account right here where you are using 5% on all trades. Okay, now we have 2 accounts here. This is someone's account, and this person is using 1% for all trades, while this person is using 5% on all trades. Now, for this person that is using 1% on all trades, each trade he takes, he is supposed to risk $10 on each trade he takes. He's supposed to risk $10. Yes, okay, I think I can highlight this. Okay, and for this person, he's supposed to risk into 20 places. I think that's $50. Yes. So now this person has decided that he's going to risk 1% on all trades, while this person has decided that he's going to risk 5% on all trades. What that means is that if we are going to take 10 trades in a week in our signal service room, then you should use not more than $10 for all your trades. All trades you take, use no more than $10. And what this means is that if, for instance, the whole 10 trades goes into loss, you will be losing $10 times 10 equals to $100 that week. Now you see that you still have a balance of $900 from your account to trade with, and our trades are not going to go that bad. So let's assume you lose 3 trades in the week. You end up losing $30. They ended up losing minus, okay, it's $30 loss at the end of the week. Now, this is because you've risked $10, which is 1% of your $1,000 account for every trade. Now you've lost $10 from this your $1,000 account, and you have an account balance of $970. Balance equals to $970. So you can see my illustration. Now you have a balance of $970. Now that's out of 10 trades. We've taken 3 and they were all in loss, and now you have an account balance of $970. Now if the remaining 7 trades we call that week ends up in profit, the remaining 7 trades we call that week, if it ends up in profit, we'll have something that looks like this. $10 times 7, that's the remaining trades we have that week, and we have you have $70 back in profit. Now if you add this $70 to your balance that you had here, I'm planning to use this. Okay, let me see. Okay, I can see use this space. Okay, now if we had this, you have a balance of $970 from the trades you took from the initial loss, but now we've added $70 in profit. Oh, I'm sorry, there's a mix-up somewhere here. Alright, there's a mix-up somewhere. Now let's assume that the next trades we took, we risked $10, but we actually made double of it, which is a 1 to 2 risk, 1 ratio 2 risk to reward. So we end up making $20 here, not 10. We end up making $20 here because our profits are actually higher than our losses. So let's assume, although sometimes we obviously do more than 1 to 2 risks, so we do 1 to 3 risks sometimes, but let's assume we do a 1 to 2 risk to reward here. So we have $20 in profit. Meanwhile, we lost $10 from our first trade here, but now when we are making profit, we've made $20 back, and now we have $20 times 7, which is $140 back in profit. Meanwhile, we lost just $10 from the trade, remember, and made back $70. I mean $140. So now we have $140 back in profit. Yes, this is the correct calculation. Now we lost $30 from losing the first 3 trades, which is this, and we had a balance of $970, but we made $20 from the next 7 trades, which are actually profitable trades, and now we have a balance of we have a profit of $140. Now what we can now do is add this $140 to the $970 we have as our balance. So our new balance will now be $970 plus $140 profit. $140 equal to I think that's 1,000. Hope this is correct. So we have 970 plus 140. Okay, that's correct. So now we have $1,110 back as the balance at the end of the week, and you can clearly see that we ended up making a profit of $110 in profit. It's very clear from this explanation. You can see right here we made a profit of 110 that week. So you see that we called 7 trades, 3 actually went in loss and 7 went in our direction, and we ended up in profit. This is what we do in our signal service, and this is what we employ you all to do when you trade with us, because we want you to be profitable. Now this is an example for someone that is risking someone that is risking 1%, as we can see here. Someone that is risking 1% is able to make $110 in profits. As you can see from this point, is able to make $110 in profits right here after risking 1% of his account. Now I'm going to do the same calculation for someone that is risking 5% of his account, which will be around $50 per trade. So I'm going to clear this. Permit me to clear this. Okay, I think I will leave this balance, but or probably I just use this area. So I'll use area for the calculation. So I'll use area for the our new calculation. Now we have this. We are trading someone that is trading 5%. Excuse me. Now someone that is trading that is risking 5% of his account is going to be using $50. Am I right? 5% of the account. Yes, is correct. So the person is going to be using 50%, $50. I mean, to trade. Oh, let me. Now 5% is actually 5/100, and he has $1,000 in his account times $1,000. Yes, I'm correct. So that's $50 per trade. He's risking $50 per trade. And let's use the same scenario. We took 10 trades that week, and we lost $10. And okay, this person is risking $50 per trade. So let's assume he lost the first 3 trades. So if he loses the first 3 trades, he's going to have minus $50 times 3 trades loss, which is equal to minus $150. So now he has lost his first. Let's assume our first signals made him lose 3 trades, which amounted to $150 because he's risking 5% of his $1,000 account, and now he has in the balance. His balance has fallen short to. His balance has fallen short to 1,000 minus 150, which is 850. Yes, his balance has fallen short to 850 after losing the first 3 trades. And like I said, our risk to reward is usually 1 to 2. Sometimes we get higher, we get 1 to 2.5 or 1 to 3. But let's still assume we are using 1 to 2 for this calculation. Now, okay, let's assume our next 7 trades actually ended up in profit. So I'm going to have our next 7 trades, and now remember it's 1 to 2, meaning that we are gaining double of what we lose. So we've lost $50 per trade on these first 3 trades, but in our next 7 trades we made $100 per each trade. So we got say 100, double of what we lost back for the next few trades. So now, and there are actually 7 profitable trades that week. Now what we now have is $100 times 7 correct trades, which equals $700 in profit. Now he has made $700 in profit from risking 5% of his account. Now what we now have is okay, now the new balance, let me put it here. The new balance is just to add the profits made from the last 7 trades to the previous balance he had. Now let's call this new balance, or I think new balance. Okay, let me just say new. Okay, new bar. Yes, new balance will now be 700 plus 700 plus. Oh, sorry, the old balance was 850. 850 plus 700. Oh, it's okay. Let me do this again, please. New balance equals to 850 plus 700. Okay, and this will be equal to, okay, let me use my calculator once again, I don't want to make mistake. So we have 800 plus 750 equals to 1,550. So now it has a balance of $1,550 from risking 5% of his trades. So this is what we have. Now you can see what we are talking about from these two examples. Now for the first one, he risked 1% of his account, and which amounted to $10 per trade. Now through our signal service, let's assume he lost 3 trades first of all, so he has lost $30 from his account, and now he's left with a balance of $970, which you can see here. Now the next, since we are doing a 1 to 2, our risk to reward, I've mentioned it over and over here, is 1:2. 1:2 risk to reward, 1:2. Okay, let me call it RR. So 1:2, that's the short form for risk to reward, 1:2 RR. Now fix your eyes here, because we try as much as possible to make sure our trades end up at 1:2 RR. So let's assume that all our trades end up at 1:2 RR, and you are able to risk just $10 by risking 1% of your account, and the first 3 trades ended up in loss, $30 loss. You have a balance of $970, but the next 7 trades ended up in profit, and you have a balance. And okay, when we multiply, since it's a 1:2 risk to reward, you get double of each amount you risk. So now you have $20 back in profit, and $20 multiplied by 7 gives you $140, which is actually your profits in at the end of the week. Now we multiply, you add the profit to your balance, and we have $1,110, and you've made a profit of $110 that week. Now using this the second, using 5% risk, we have $50 that you've risked for each trade. The first 3 trades ended up in loss, so you lost $150, which leaves you with a balance with $850. Now from our risk to reward of 1 to 2, you took the next 7 trades and ended up making profit double of what you lost on each of the other trades. So now you have $700 in profits. We added it to your new balance of your old balance of $850, and we have a new balance of $1,550. So you can see that even with the losses, you can still stay in profit. So this is just the explanation I was trying to give for the session that I talked about, the third tip on using proper risk management. Use the same risk for all trades. Now I move on to the fourth one. Don't take trades into your hands. Now there are a lot of people that make this mistake. It's a very terrible mistake. Don't exit trades before we ask you to. I know you could get emotional. The reason why you get emotional when you take trades is because you're actually over leveraging, and we have advised several times for you not to over leverage when you take your trades. So when you over leverage, definitely your heart will pump when the trade goes against you, and when the profit goes, you probably want to cut it before we reach the original target. The market moves in waves, so we are not expecting a straight move to the upside, and that's the reason why we are monitoring the trade. So you don't want to take the loss into your hands. Don't exit the trades before we ask you to. In fact, any signal service you are working with, do not exit the trades before they ask, because they are watching the trades and they have a reason why they want the trades to run. So I hope you understand this fourth tip. Now for the fifth tip, which is I think the most important tip, you need to believe in your signal service provider. Now if you want to try to be smart, you want to do some things on yourself, then definitely you didn't need a signal service provider in the first place. You need to believe in their service. If you believe in their service, then everything they say you should do it. I know sometimes it may not make sense to you, but it's not making sense to you doesn't mean it's not making sense to them. They are the signal provider, and you've contracted them to do a job for you. And when you contract them to do a job for you, you relax and let them do the job for you. Don't take the trades. Don't take the laws into your hand. Follow them blindly. Yes, I think I should use that term. Follow them until you think they don't know what they are doing again. Then it's better you opt out of the signal than to now decide to use your own idea to follow the trade. You may end up in serious losses. So this is it. These are the 5 tips you need to follow to take profitable trades using our signal service, Blue Pips Forex signal service, or any other signal service provider you are working with. Now, let me run through it again. The first one: set a special alert or tone for the signal group. Take all trades. Use proper risk management. Don't take trades into your hands. Don't exit trades before you are asked to, and follow the orders of whoever called the trade. And finally, believe in your signal service provider. If you do these things, trust me, you will be profitable. And I think we've done well. I hope I've been able to, especially the risk management part. A lot of people don't know about this, because some people have contacted me telling me that the loss that we just made blew his account, and I'm like, why should one loss blow your account? Out of over 10 trades, we have over half, more than half of the trades in heavy profits, and just one loss blows your account. Then obviously you don't know what you are doing. So I hope you are able to understand why you have to follow these laws. If you definitely follow these laws, you will make profit using our service. Thank you for listening. My name is Victor once again, and have a profitable trading week. Bye.